Share Shootout brought to you by Lion of Africa Insurance, insuring South Africa's future.
It's ferocious, diabolical and downright mean and dirty. This is Share Shootout League, the only stock picking show on television that matters. Welcome to the show. You're watching it on CNBC Africa, first in business worldwide. Right, so if the South African economy is cash strapped, will government be taking meaningful steps against wasteful expenditure? Will the president, for example, get a home improvements bill on a treasury letterhead? What do the boards have against guys with piercings? Both Tsogo and Marcel Golding out on their ears, so to speak. We don't know the answers to any of these questions. What we do have is a pretty good time guessing, however. Take a look at what happened on Twitter regarding the match between the good guy and the one last week. The good guy came up tops in the battle of the bottom feeders on the Share Shootout League. He massacred the votes. He ran away with the 3 points. Sad to say for the one, but he stays at the bottom of the food chain. Even he knows now that there's no kind of rally that'll see him come back into contention. He started from the bottom, and he's still there. He's not going up the log. Nedbank, you really need to be more savvy. That's a Nedbank tagline joke online. Welcome to Share Shootout League. It's a fabulous day, and it's really nice to have you with us as well. You decide who wins this match, and in the long run, who will win the league. The power is in the hashtag. What you have to do is follow at SSO League and tweet any of the stock pickers' hashtags. It's as easy as tendering a PPC resignation. Back to the match at hand. Our first stock picker has attempted to never actually manage the falls of Gilmour in the Scottish Highlands. Our second stock picker can't say Gilmour, but he does know the balance between equity fund and Mandarin. Can he say it in Mandarin? I wonder. I give you, ladies and gentlemen, the players.
Yeah. So I've got to look like it's very important stuff we're doing here. Absolutely. Chris Gilmour, investment analyst with Absa Wealth and Investments. Investment philosophy is very simple. Buy quality, get paid for holding it, and rarely, if ever, sell. That's interesting. Yeah, I'm getting some cheeky emails here. I think we'll keep that a secret for the time being. I don't want to show my hand just yet. Biggest competitor is the famous Sasha Narushkin. I think so, and I think maybe it's a bit different from previous times. I think the mind is going to be more concentrated now.
It's Mathew Warren, and I'm head of financials and retailers here at First Avenue and a partner as well. So what we do is we do intrinsic value investing, and so we seek out high quality companies at a discount to fair value. And that's really, that combination that we're always looking for the best combination possible to put that into the portfolio. I think, if anything, just keep it simple. So get to the main points, get to them quickly so that people can understand where I'm coming from and think on my feet from there. Oh, I don't know, I'm new to this, so I guess I must just bring my A game and see what happens. I'll give it my best shot, certainly. Stock pitch is always a good way to get your thoughts out quickly and efficiently. We have to do that in the shop here, so why not do it for the benefit of the viewers.
Both Chris Gilmour, the Scot from Absa Wealth and Investment Management, and Mathew Warren, Shootout from First Avenue Investment Management, are hoping to move up the log. The Scot could join the top 3 players on at least 12 points, while Shootout, that's Mathew, well, how do you say 6 points in Mandarin? Do you even speak Mandarin?
I don't, no.
Well, no wonder you don't have 6 points yet. Well, let's see whether or not he does. First, the house rules. Both players need pre-picked 3 shares, and only I know what they hold. Each player, of course, must accept at least one of the other players' stock picks, and each has got 30 seconds to argue that stock pick. They can choose from the JSE. We give them an offshore allowance because we're terribly generous that way. 1 international stock per round. Now the rules are out of the way. Let's grapple and let's battle. And thank you for not wearing a dress this time. The last time he was here, he was wearing a dress. He called it a kilt, but it's a dress. Yes, it's a dress. It's a man dress from Scotland, but thank you for dressing more appropriately.
Pleasure, Bruce.
I'm looking at your first pick, Chris Gilmour, and I'm astounded. I'm befuddled. I am baffled. But then it must be bonus time. In 30 seconds, Barclays Africa Group. Aren't these the guys you work for?
And it's got nothing to do with hut scraping. No, big word. Yes.
Scottish.
Look, it's all to do with the fact that it looks remarkably cheap. Amongst all the big banks out there, 10.7 times PE, 5.5% dividend yield. And I think that dividend yield is going to carry on looking quite juicy for quite some time to come. But not just that, I think they've got their transactional side right at long last. They've stemmed the loss in market share. They've been very conservative with their credit advancements. And if you look at the rest of Africa, it's got arguably the best branch network up there. And I think with the reflection of time...
up. No more sucking up to Maria on this show for you, Chris Gilmour. But yeah, the thing with Absa, Barclays Africa, forgive me, is that it's always cheaper than the rest of the market. It's perpetual, its multiple is always lower because people have always been a little bit suspect about the numbers, suspect about the provisioning, suspect about the way in which the branch network has been managed, and a little bit dubious about the massive benefits that may or may not accrue from the African network. Is it really worth holding any banking share in the current environment with the risk of interest rates going up?
Well, look, I mean, the endowment effect comes into play, and we'll get a bit of relief from that, I guess. But beyond that, I think the rest of Africa will start flexing its not inconsiderable muscle as we move into next year and the year after. I mean, if you're looking at most of those countries out there with growths of, 6 to 9%, I mean, it's quite incredible. And if you take a 6% growth rate in any country, you're going to double your GDP in 12 years.
Does a 6 to 9% growth rate over 10 years translate to earnings of banks in those countries? However?
Eventually, over the long term, yes, I think it will.
Okay, eventually over the long term. You're a patient guy, you're a young guy, Mathew Warren. Have you got long enough to wait for these banks to come to life?
Barclays is the only share that we own in the banking sector,
damn.
so I'm a fan.
There's an ally for you.
shoot
He's
that one
even wearing a red tie. Yes.
I think they're going to emerge as counter-cyclical here. So yes, they've been lagging through the upcycle. They've been extremely risk-averse, both on the underwriting side in terms of credit, but they've also been de-risking the balance sheet, taking a lot of dodgy, highly volatile things, equity, holdings, everything else off the balance sheet. So the risk is minimized steadily. They were losing clients also. Now, part of that was the risk appetite. Part of that was falling down on the marketing front.
Part of that was stupidity. I mean, they put their logo, the Absa logo, on every sports team in the country's T-shirt and then didn't have any money to advertise product. Well, the rest of the banking sector was advertising product and telling people that they had better product. Yeah. They dropped the ball badly. 5 years into her reign, Maria Ramos, is she finally got it right? Is the bank finally positioned for an uptick?
I think so. I mean, you see the ad spend ramp up, and with a really good campaign in Prosper, it's trying to bring in aspirational, high lifetime customer value clients, and they are winning clients at the high end now and doing better at the middle end. The low end perhaps is a little slower to come around.
I take it you'll take it.
Yeah, no, I'm a big fan of the share price. It's cheap here. Do like Absa.
You've been accepted on your first pick this evening. Boy, is he looking for a job at Absa? I wonder. Anyway, Mathew Warren, let's go to you then on your first pick. This one surprises me because we talk about value and value investors, and value investors seldom buy shares at 28 times multiples, but this has got a great track record. You talk about intrinsic value, and this is what you like about cheap T-shirts and cheap short pants. Tell me why you still like Mr. Price in 30 seconds.
Mr. Price, it's been one of the best companies in the economy, and it's been one of the best stocks in the stock market for a long period of time. The earnings CAGR is north of 20%. They grow sales north of 10%. They do it year in and year out. When times get tough, they actually get trade down. So they gain customers in a downturn, and they keep a lot of them as things get better. People are splitting their shop. They've been improving margins, return on capital, and their space in the market. It's an extremely impressive company. The valuation actually implies that the growth is going to slow down quite rapidly. I don't think that's going to happen.
There we go. This looks like the Mutual Admiration Society.
Took the words right out of my mouth.
Shootout. Yeah, I love your first pick, you love my first pick, and we'll all be friends because you're nodding your head like one of those little dogs in the back window of an old man's car.
Well, I was going to say exactly the same thing. It's incredible. This is also one of our core holdings, has been for a long time. I can hardly shoot this one down. I mean, we just love this stock. I mean, for a long time, we've agonized over this thing. Can it retain this kind of earnings growth? It's the one retailer out there that has got a decent online offering. I mean, you go into most South African retailers and you can go into their website and you can't actually buy anything. And you think, why do they bother? It's marketing and stuff like that. With these guys, you can buy it and you can either have it delivered to you by courier or you can go and click and collect. And to the rest of Africa, they've got an amazing amount of recognition. It surprised me. So, you put all of that together, and the fact that people, they might disagree with the actual demographics here, but I think a lot of people are actually physically trading down because the prices are so incredibly good.
Yeah, I mean, but they're beginning to see inflation come into the network. I mean, you can't have a rand at 11, 12 to the dollar and still have price inflation within even a Mr. Price network of 1 or 2%. I think their last numbers were close to price inflation of 10%. Even they are looking a little bit vulnerable from a consumer perspective, Mathew?
Part of that was mix, selling glasses in groups of 4 instead of 1, but it was high nonetheless. But actually, it's oddly enough, when inflation rolls through the system, it actually benefits them. So their price points are so much lower than their peers. You put 10% on top of both numbers and the rand amount actually grows larger, and they have a bigger amount that the customer can save by going to Mr. Price.
Kitching, we'll take it.
I'll take that one.
There we go, he'll take it. So both of our first picks have been chosen this evening, which is kind of unusual on Share Shootout League. We rather see people boxing clever. We rather see them boxing smart. We rather see them taking it heart to heart. Oh boy, the rhymes are going to kill us tonight. Okay, let us go then on to your next pick, Mr. Gilmour. Barclays Africa, what other subsidiary could we get? Maria Ramos is also, of course, a director of Richemont. I'm surprised that you haven't bothered picking Richemont, but you haven't. No. Okay, but she is on the board there. I thought you might just, as part of this bonus strategy of yours, do exactly that. But this is an interesting one as well. Tsogo Sun in the gambling space, in the casino space, in the hotel space. It's one which has come under a huge amount of pressure because of discretionary spend not being around as much, and I don't see much more discretionary spend, if any, in 2015. So why would you take a gamble on Tsogo? 30 seconds.
Gamble. On the gambling side, yes, that is taking a bit of strain. I mean, it's not not recession-proof. It's a little bit recession-resistant, I think, but it's a relatively cheap share, 15 times PE. But I think what we're looking at here is a lot of that surplus cash has been going in to expand their operations in the rest of Africa, particularly, which over time I think will do well. Locally, I think the hotel side will do exceptionally well once we start getting a lot more in the way of real, genuine foreign tourists from overseas coming in, because our hotels are incredibly cheap here. What you pay for a 5-star hotel here, they pay for B&Bs in Britain.
Real genuine tourists, as opposed to what kind of tourists?
Overland African tourists.
There we go.
Yes.
Okay, absolutely. It's people with their foreign currency to come and spend and lavish upon themselves. Tsogo Sun, it's popular. The brand is strong. The Southern Sun business, of course, is very popular in South Africa. They've segmented the market very effectively as well, taking on the city lodges of the world. There's a lot to like in Tsogo Sun. Is there enough, however, for you to accept it, Mathew Warren?
No, I don't think so on this one. We own City Lodge, actually, which we like a bit better. But I think with this one...
But City Lodge has got no ka-ching machines, which make all the money.
Yeah, they have a phenomenal cost structure where they operate in the 3-star market.
They're the Mr. Price of hotels.
They're defendable. Yeah, I think so. With Soho, I think you have a little bit of a problem of being in that 4 or 5 border area, and international guys are coming to play. So you see a lot of interest from the international guys coming in at 5-star, and I think that's going to continue. But it goes with the cycle that way too. So you get people trading up and trading down. It's actually the good part of the cycle. So I think things are going a bit better, but you have to watch out if things get tough there.
Okay, so you're going to shoot it down?
I think so.
Okay, you're going to shoot it down. But it is, I mean, it is an interesting pick. I like the pick. I think management has got a good sort of tie in there. Myself and Orlock has got a 200 million rand potential liability if he doesn't pull it off. Right, yes. He's kind of got skin in the game on that particular one. Okay, there we go. Chris Gilmour, you shot down on Tsogo Sun, market cap of nearly 28 billion rand and growing. Some nice legacy properties in there as well. So I'm going to watch this one very closely. Mathew Warren, here's a company I know nothing about. Here's a company I'd never even heard about. This goes back to your days as an equities analyst in America. You're fighting down and dirty. You're taking a share that probably even Chris Gilmour hasn't heard about. What's W.W.Grainger? In 30 seconds.
I might not be playing fair here, but it's the largest U.S. industrial distributor. So it's things that you need to fix a factory line. It's things you need to fix something at the distribution warehouse. It's stuff that's used on the construction site. They're the biggest. So they have 1.4 million products that goes through their 15 distribution centers from all kinds of suppliers. So there's a lot of suppliers on one side. There's a lot of small customers making small purchases on the other side. What you end up with is extremely high margins, great return on capital, very defendable position. It's extremely fragmented as well. So the runway for growth over time is enormous. They've grown very well, and they're going to continue down that path.
Interesting. Have you ever heard of it, Chris Gilmour?
I have to confess, I've never heard of this one.
It sounds compelling, though, because if you are a believer, and I don't know if you are a believer in the US recovery, then this is a perfect sort of business to be investing in, if you want a single share exposure, of course.
What sort of clients are we talking about here, Matthew?
Yeah, so it would be all the factories in the States.
Every single one?
The guys that have moved to China have already gone, but they have great market share. It would be construction sites, commercial construction especially. It's those kind of customers. It's stuff they need now to fix something. So they either order it online or they go to the shop and get it.
And competitors?
Yeah, so there's a lot of competitors. It fragments quite a bit. The best competitors are Fastenal and MSC Industrial. MSC Industrial is online only, so that's a good model for them. Fastenal has more stores further flung, but not as many sales, so they don't have the same rebates going through it as Grainger does.
Okay, but as we know nothing about it, either of us, Chris Gilmour.
Puts me in a very difficult position. You see, on the one hand, I'm inclined to say I'll have a look at this, but you see, the trouble is I don't know enough about it to say to make such a reasoned
this is the dirtiest trick he's pulled on Share Shootout.
That's a very dirty trick. It's very
It's a very good
That's exactly
dirty trick.
what you're supposed to do.
Whose idea was it, Chris Gilmour, to include foreign equities on Share Shootout League? Who came up with the original idea and said to me one day...
A bunch of us said that, yep.
But who was the ringleader?
No, it wasn't me.
It was you. It was you. You certainly were the spokesperson for the group who said, you know what, we really need an offshore allowance. Well, that offshore allowance has just come and bitten you in the butt.
Yeah, I think you're right.
You're shooting it down through ignorance.
Through ignorance.
Through
yes,
ignorance. So
enough.
Good pick. Well done to you, Mathew Warren. Shootout, getting downright dirty. Now, who will come out victorious and who will be punished like Oscar Pistorius? We'll take a quick break and we'll see you after the break. This is CNBC Africa. You're watching Share Shootout League, the only league in the world without overtime. This is match day number 27. We're drawing closer to the final four, and only your votes can alter the look of the league. What you need to do is follow at SSO League, and you vote for either Chi-Town, really needs your votes. And after today's filthy trick of W.W.Grainger, the $15 billion company that neither the Scot nor I had ever heard about, we think he deserves one of your votes for that at least. Of course, the Scot has come out fighting as well and sucking up to his bosses. We're surprised he didn't choose Richemont, where Maria Ramos is a director, but he did choose Barclays Africa Group, his employer, but he does have some very good reasons as to why he chose it. Mathew Warren did accept his pick of Barclays Africa Group. He likes the price, he likes the positioning, and says it could be counter-cyclical. Maybe Barclays Africa's time is coming. Then the Mutual Appreciation Society, that is Chris Gilmour this evening, accepted Mr. Price with open arms, saying this is the finest retailer South Africa has got. They hold shares in Mr. Price as well, and he would accept it with open arms. They've done it. So Barclays Africa gets the Chi-Town thumbs up, and of course Mr. Price gets the thumbs up from the Scot himself. Chi-Town gets the approval there. Let's get to the final round of the battle with the last two stock picks of the evening. One is local and one is global. One is a share and one is an exchange traded fund. Well, you know that yours is the share, don't you, Mathew Warren? Howden Industrial. This is about as downright dirty as going for W.W.Grainger, because not that many people are aware of Howden. In 30 seconds, how do you choose that?
We did go a little down market cap here, but it's a great company. It's partially owned by Colfax out of the States, a very strong company in terms of lean manufacturing, so getting the cost structure down and doing what the customer needs for the product. They're a specialty engineering company. They do a lot with fans, heat exchangers. They sell into Eskom, they sell into the mining industry. They also have environmental setups that they design and implement. A big part of the business is spares and repairs, which is high margin, steady, ongoing business. They make a lot of money out of Eskom. These old plants that are running down, they make money fixing them up.
It's a fabulous business. It's one of those decidedly dull, boring engineering businesses that doesn't attract any scandal, it doesn't attract any gossip, and that's precisely the sort of thing that long-term investors need to be looking at. It's hard to shoot down. I'm keen to see you try, though.
I've looked at this one. It's been around for a long time, and as Mathew says, I think it's in the right part of the business. Unfortunately, it doesn't attract an awful lot of investor attention either.
And that's why the multiple's sitting below 9 times, and that's the risk. But if you are a deep value investor and you can afford to be a deep value investor with time on your side, surely this is one that will reward you.
I think you'd have to wait an awfully long time for this one, because I've been watching this. Goodness, I don't know for how long now, back into the 90s, maybe even before that. And it just doesn't seem to want to perform. It gets the odd spurt from time to time.
And you're not getting a great dividend from it either, are you, Mathew? I mean, it's less than a 1% dividend yield.
Yeah, but it's extremely well run though. They take the capital, they reinvest it only to what they need. The rest comes back to you. So they do special dividends periodically
they do special
as well.
Dividends from time to time. Okay.
Kind of boosts up their return. So yeah, it's extremely well managed. The guys running it have a tight ship. You go there to their offices. You're lucky if you see new paint after a few years. They're not putting a lot of capital into this business.
Okay.
Reminds me of that little packaging company in Cape Town. What was it called? The one that's doing a juice now.
Oh, Tetra Pak? No?
No.
Oh,
I thought Mathew would know about that one.
Oh, well, there we go. Oh, you
Yes.
guys are fighting dirty this evening.
Yes.
You really are fighting dirty. But Howden, it's good, it's reliable, it's solid, it's boring, it's cheap, but it's just not for you.
Can't get excited about it.
You don't have to be excited, you just want to make
No.
money.
Yeah, and I don't think you really will out of this one, unfortunately.
Why are you going to make money out of it?
We've done pretty well in the share. It is fairly illiquid. If you're an owner like we are and we own a decent amount of the company, we're going to be sitting there for quite a while, letting the earnings accrue.
Okay, so he's there, you're not, you're shooting it down. Howden is gone, I'm afraid. Shitown. Let's see whether or not you can do a downright dirty. I did suggest earlier that if you were optimistic, if you were bullish about the US economy, then you would need to go for a business like W.W.Grainger because it is in industrial America. You are a fan of the American turnaround.
I certainly am.
You buy the American turnaround,
I do indeed.
but you want to spread your risk with the American turnaround rather than go stock specific.
Absolutely.
How would you do that in 30 seconds?
Well, you'd buy DBX MSCI USA, the ETF. You get a huge spread of companies. What about 1,800? I think or thereabouts. And you're buying into the American economy at relatively low risk. You're dispersing that risk dramatically. A lot of people don't quite realise that the US has got not only a growing population but a growing working population. And I think while attention is going to move away from China, it's going to come back into the US, into manufacturing across the board.
Okay, that's within your 30 seconds. Okay, a couple of bits of jargon that we need to dispel quickly. DBX, MSCI, US. DBX, Deutsche Bank Exchange Traded Funds.
Morgan Stanley Capital International.
Okay, so and then Morgan Stanley Capital International, MSCI.
Yeah.
What exactly are you buying when you're buying this particular
You're buying a basket
ETF?
of shares, okay? So you're
At 1,800, so it's bigger than the S&P 500, it's bigger than the Dow, it has got breadth and depth.
Yeah, it has. So, you know, you've conceptually, at least, you've got title to all of those underlying shares. So by doing this, you're spreading your risk and you're getting a whole host of, a lot of companies in the US, so that you're not going for one particular company. You're not increasing your risk by just buying one or two companies where, you know, you might see these things go belly up, for example.
Isn't this index too big? Isn't there too much diversification? And we look at Satrix 40 as the ultimate South Africa diversification. It's 80% of the market you could buy through just one index tracking fund of South Africa. Here we're buying an index tracker with 1,800 underlying components. That's a lot of stuff that can go wrong.
It is a lot. Well, yeah, but I think, as I say, you're spreading the risk. And what you're effectively doing here, Bruce, is if you're taking the view that the rand is going to depreciate in the short, medium, and longer term, which I certainly do, then I think you're hedging yourself in that regard very nicely.
Mathew Warren, you are from that place of the United States of America originally. Is this one that you would go for, or is there a better index tracker that we could choose to give us decent exposure in the United States?
Yeah, if you wanted to go even more broadly, you could go for the Wilshire 5000, which is like 98 or 99% of the market cap, thereabouts.
Isn't that even more mad, though?
Yeah, I mean, it's
Can you
really,
not go narrower?
We pick shares, so actually, there's nothing wrong with low-cost indexing. I think it can make a lot of sense, and I mean, we pick shares. We think we can do better than the index at lower risk, so that's what we do at First Avenue. But I think in terms of the states, I mean, the economy is going stronger than most of the other major economies. The banking system has healed itself dramatically and steadily over the past several years. The shale energy revolution, you can almost call it, is lowering the cost of doing business in what's already a very competitive and efficient economy. So,
but for Joe Schmo, for me, I don't have your expertise. I might want to very well buy the DBX, the DBX product to give me exposure to a broad US economy. In there, I might add a Coca-Cola at some point if I'm not Warren Buffett, or I might add a Microsoft if I choose to at some point in the future. But beginners, it's not bad for beginners.
Not at all. I think indexing is a low cost and safe way to invest.
But you got to shoot it down.
And yeah, we just go for shares, that's all.
There we go. I'm afraid you've been shot down. I like it, though. That was very adventurous of you. Well done to you, Chris Gilmour. Not as adventurous as wearing a dress on television, but adventurous nevertheless. So what do we got this evening? Mathew Warren from First Avenue Investment Management, Mr. Price, W.W.Grainger and Howden. Mr. Price accepted. W.W.Grainger shot down through ignorance of both Chris Gilmour and myself. It's a good story to tell, however. And then Howden Industrial, another good story to tell, but it's just... and then Chris Gilmour from Absa Wealth and Investment, choosing Barclays Africa Group, grabbed with both hands by Mathew Warren. And then Tsogo shot down from the point of view that he prefers City Lodge. Then DBX US, he prefers the individual shares and would rather take his chances in buying the individual stocks than the DBX US exchange traded fund, but does concede For beginners looking for global diversification, it is something you can buy using Rand to get international exposure without all the fancy tricks and hoops that you have to run through and jump through to get exchange control approval from the Reserve Bank. These guys do need your votes, especially Shootout. He's such a nice guy, such a pretty tie. Give him, that's another rhyme. I'm so good with these rhymes this evening. Do give him your votes, and let's see whether or not the American can get a little bit of Twitter support. Or do you want to go for the Scotsman? The Scot, of course, needs to get into the upper echelons of this game. We want to see the Scot go up against Gary Boyson. That'll be the long and the short of it, won't it? The voting will close. Oh, that was cruel. On Sunday midnight. Follow at SSO League. Use the power of the hashtag. We'll be back next Tuesday with match day number 28. This is the big one. Huge even. It's Sasha. People used to whisper his name. Now they've realized he's not that scary. Bucks takes on Running Dog, who'll be taking a break from his honeymoon to join us. That's how much he wants to win this show. It'll be his last game. It'll be his last game. And well, maybe not his last game. Maybe he won't be married anymore. But Sasha's promised to impart valuable marital advice. First of which will be, don't take a break from your honeymoon to come and play on the show. Tune in for the advice and stock picks. Either way, we'll be here next Tuesday, 8:30 Central African time. Until next week, stay mean and do stay cunning. Good night.